A weaker yen is a double-edged sword for Japan's economy. On one hand, it increases the cost of imports, especially commodities such as oil and gas, which Japan relies on heavily. On the other hand, it boosts the competitiveness and profitability of Japanese exporters, who sell their products and services in foreign markets. In this section, we will focus on how a weaker yen benefits Japanese exporters by making their products more competitive and profitable in overseas markets. We will look at some examples of sectors and companies that benefit from a weaker yen, and how they translate the currency gains into higher earnings and growth. One of the main benefits of a weaker yen is that it lowers the relative price of Japanese products in foreign currencies. This means that Japanese products become more affordable and attractive to foreign consumers, who can buy more with their dollars or euros. This stimulates demand for Japanese products, especially in price-sensitive markets such as emerging economies. Another benefit of a weaker yen is that it increases the value of overseas profits when converted back into yen. This means that Japanese companies that earn a large portion of their revenues abroad can enjoy higher earnings in yen terms, even if their sales volume or margins do not change. This boosts their bottom line and shareholder returns. According to Wisdom Tree Japan's Jesper Call, North America accounts for around a quarter of Japanese listed companies' profits. Therefore, a weaker yen against the dollar can have a significant positive impact on their earnings. For example, Toyota Motor Corp., Japan's largest automaker, reported a 50% increase in its operating profit for the fiscal year ended March 2022, partly due to the favorable exchange rate. Other sectors that benefit from a weaker yen include electronics, machinery, chemicals, pharmaceuticals, and tourism. For example, Sony Corp., Japan's leading electronics maker, saw its operating profit surge by 86% in the fiscal year ended March 2022, thanks to strong sales of its PlayStation 5 console and image sensors, as well as the weaker yen. Similarly, Fanuc Corp., Japan's top industrial robot maker, posted a 44% jump in its operating profit for the same period, driven by robust demand from China and other Asian markets, as well as the currency effect. A weaker yen also helps Japanese tourism industry by making Japan more attractive as a travel destination for foreign visitors. According to Japan National Tourism Organization, JNTO, the number of inbound tourists increased by 18% in 2022 compared to 2021, reaching a record high of 35 million. A weaker yen also encourages more spending by foreign tourists, who can enjoy more value for their money. In summary, a weaker yen benefits Japanese exporters by making their products more competitive and profitable in overseas markets. It also helps other sectors such as tourism by attracting more foreign visitors and spending. A weaker yen can be seen as a positive factor for Japan's economic growth and recovery. A weaker yen can have a positive impact on the earnings of Japanese companies that have significant overseas operations, such as automakers and electronics manufacturers. This is because a weaker yen makes their products more competitive in foreign markets, and also increases the value of their overseas revenues when converted back to yen. For example, Japan corporate profits rose to 28.32 trillion yen, $201 billion, in the first quarter of 2022, jumping 17.6% over the previous year, data from the Ministry of Finance showed. This was partly attributed to the yen's decline to a three-decade low against the dollar, which boosted the earnings of exporters like Toyota Motor Corp., 7203.t, and Sony Group Corp., 6758.t. However, a weaker yen is not a big boost for Japan Inc. anymore, as some analysts and company officials have pointed out. This is because many Japanese companies have shifted their production and supply chains overseas, reducing their reliance on exports from Japan. For instance, around two-thirds of the cars that Japanese makers sell annually are now made abroad. Moreover, some Japanese companies are focusing more on providing digital solutions and services rather than just hardware, which are less affected by currency fluctuations. Another downside of a weaker yen is that it drives up the cost of imported raw materials and energy for manufacturers at home, as well as for consumers who have to pay more for food and fuel. This can hurt domestic demand and consumer confidence, which are already weak due to the COVID-19 pandemic and other factors. A weak yen also makes it harder for Japanese companies to acquire businesses overseas, and makes them more vulnerable to foreign takeovers. Therefore, a weaker yen is not a simple formula for higher profits for Japanese companies. It has both advantages and disadvantages, depending on the industry, market, and business strategy of each company. The key is how well they can adapt to the changing currency environment and leverage their strengths in innovation and quality. A weaker yen has long been considered a boon for Japan's exports-focused economy, helping blue-chip exporters such as Toyota Motor Corp. But that narrative is increasingly in question as the yen's recent plunge aggravates the impact of surging commodity prices, hitting some businesses and consumers much harder than before. The yen has slipped to more than two-decade lows against the dollar, largely because Japan has a different view on inflation than its global peers. The Bank of Japan stands out with its commitment to maintain rock-bottom interest rates to revive inflation on a sustainable basis, even as surging prices in most of the rest of the world spur the U.S. Federal Reserve and other central banks to roll back stimulus and raise rates. But a weak yen, once seen as favorable for Japan's exports-focused economy, has now become a pain point as it eats into household finances and confounds policymakers. A gradual shift by Japan's manufacturers to offshore production means a weak yen has become less of a boon for local exporters than it was about a decade ago. So how does a weaker yen affect the Japanese economy and society? Let's take a look at some of the pros and cons. On the positive side, a weaker yen can boost the competitiveness of Japanese products abroad, increasing the value of revenue earned overseas and attracting foreign investment. A weaker yen can also stimulate domestic production and improve the current account balance due to the J-curve effect, which means that exports initially fall but then rise as foreign demand adjusts to the new exchange rate. On the negative side, a weaker yen can push up import prices, weighing on profits at companies dependent on raw materials imports and household purchasing power. Japan imports most of its energy and food, so a weaker yen can raise the costs of these essential items. A weaker yen can also reduce the real value of wages and savings, eroding consumer confidence and spending. Moreover, a weaker yen can encourage young workers to seek higher-paying jobs abroad, exacerbating Japan's labor shortage and aging population. As you can see, a weaker yen has mixed effects on Japan's economy and society. While it may help some exporters and stimulate some domestic production, it also hurts many businesses and consumers who rely on imports or have limited income. The net impact of a weaker yen depends on various factors, such as the degree and duration of currency depreciation, the elasticity of foreign and domestic demand, and the responsiveness of monetary and fiscal policies. In conclusion, a weaker yen is not necessarily a blessing for Japan. It may not be enough to lift Nikkei to new heights, especially if it comes at the expense of household welfare and social stability.